All right. Now, before I get started with everything, I just want to check with everybody. What is a good amount of pips everyone is looking for? What is an acceptable amount of pips people need to earn? What are you particularly yourself looking to gain from the Forex market? Okay. Um, is that okay? 40 pips average. Prajwal says 20 pips per day. Okay. So 20 pips a day is what, 500, 600 pips a month. 40 pips on average will put you, okay, Perry says 50 to 100 pips per day. Okay. Okay. I believe John says 50 per day. Okay. And Vincent says it doesn't matter as long as I can get pips every day and trade profitably. Okay. Let's, so let me show you. Now, the highest pips that we've discussed is close to 1,000 pips. I think it was John's that says 50 to 100 pips per day on a month. That comes out to more than 1,000. Okay, today what I'm going to show you is how to achieve those numbers in a single day. I mean, I'm going to show you how to do it with a guaranteed profit on the back end. All right, so let's go through a quick recap first. All right. Just remember, Forex trading is an investment and not a job replacement. Okay? You should never trade on moving data. Okay? If you're looking at the charts, do not make a decision based on the candle that is running. Always make a decision on closed candles. It'll keep you alive, it'll keep you going, and it will not scare you. Okay? Stick to a higher time frame, such as 1 hour or above. You want to avoid getting whipsawed by the news. And when you're trading on a higher time frame, the broker cannot manipulate the price to stop you out as easy. Okay? And always, always, always trust your analysis. You've done the research, you've entered the trade for a reason. Exit with the same reason. Do not exit based on what you see at the last minute. Okay? And always keep a bird's eye view. I'll explain that. That comes with correlation. I'll show you how to read that with the bird's eye view. Now, a lot of you trade Euro USD. Some of you like the Beast. A lot of you also trade Pound USD. When you're trading these pairs, looking at just one pair, you will never understand what the market's doing. You know, if you're just looking at Euro USD, you've become a king looking at Euro USD. But how do you know what the euro is doing, why it's doing, stuff like that? So we're going to go over everything from front to end, a complete strategy. I'm going to give you what I personally do to trade. All right. Yes, somebody has raised their hand. Hi, Sonia. Did you have a question? Okay. So, okay, we're good. So I think people are still walking in now. Okay. So let's get our charts loaded up here. All right. Let me clean up everything. Okay, the way I trade always is I trade on a empty screen. I do not like indicators, and I hope after today's session or after tomorrow's session, you guys will learn that using indicators are really useless. There's no point. Okay, now going back to the basics, you need to understand the flow of the market. You can see the market's going down here, then up, then down, then up. So look at it from a distance and understand where the market's headed. Now, the market is moved by larger players. We're talking about central banks, economies, governments are involved, everything like that. So when a decision is made, it's not a small guy like some investment banker sitting in the back of a chair and saying that, okay, I'm going to sell, $50 billion right now, and I'm going to move the market. No, it doesn't work like that. When you're trading such large amounts, you have to process paperwork, and that paperwork takes time, and the same paperwork goes through a lot of places, corporations, banks, hedge funds, and this is the way you can know what the market's trying to do overall. Now, I'm not going to sit here and explain to you how all the paperwork works, because we can't do that in 1 hour. There's no way. But I can explain to you is what to look out for and how to mimic what these larger players are going to do. When I say larger players, I'm not talking about single entities. I'm talking about multiple players put together. Okay, what we need to look for all the time is exhaustion candles. Okay, let me just point them out right now, and then we'll discuss them. Okay, so what are exhaustion candles? Exhaustion candles is simply a candlestick that has a very large tail and a small body compared to the tail. Okay, you can see it for this one as well, even the one before, right here. You can see that these are exhaustion candles. Exhaustion candles basically tell you that the market is getting ready to do get a reverse. Now, why? You can see this flow. The market's gone up, then down, then up. What's the reason that we've taken this dip right here? Okay, so what this is telling us is the market overall wanted to go up, but during this price right here, let me draw it for you, right up here, they didn't, everybody started to buy, and you cannot win in Forex if everybody's in the same direction. To win money in Forex, somebody has to lose money in Forex. It's just a rule of thumb of any business. If you have more money in your pocket, that means somebody has less money in their pocket. Okay, it's tough to hear, but that's how it works. So they want a better price. So what they do is they move the market down, and once they start seeing the right price, they start pushing it up very quickly or pushing it down very quickly. And this is why you see these large tails everywhere. This gives you an indication that, okay, time for a turnaround in the market. Okay? Sometimes they are satisfied and they continue the trend. Sometimes they are not, as you can see here. Okay, so exhaustion candles are very necessary to look at for any trading strategy to understand what the market's going to do. Is everybody with me so far when it comes to exhaustion candles? Okay, we have, I'll point to some more examples so you can get an idea of how they look. And I will post a lot of examples on our website because I love exhaustion candles to the core. So, yeah, it's a lot of them. Okay. Yes, they are also called hammers. Some of them call them pin bars. I just call them exhaustion candles because it's easier to recognize what an exhaustion means. The market moved up, it got exhausted, came back down, and closed near the open. Okay, so yes, it's called hammers. No, they're not necessarily doji candles. If you have an open and close at the same price, I would avoid it. But Olivier, yes, it cannot work alone. We'll get to that. Now, so you see these exhaustions, right? What do you do with them? Okay, let me remove some of these questions so I can see if there's new questions. Okay. Now, how valuable are exhaustions? What can you do with them? Except for catching a reversal, but we've always learned, the trend is your friend. We can't go against the trend. If we go against the trend, we might lose. Here's the thing. When you know which way the market is heading, going against trend or with the trend doesn't really matter as much. All right? Now, Let's point this out one by one. How many of you have used pivot points? Okay, I'll get this indicator for everybody. Where did it go? Where? Yeah, there we go. Okay, so pivot points. Yes, Perry, you use pivot points. Okay, for those of you who have not used pivot points or do not know what pivot points are basically yesterday's movements average. Okay, these dotted lines that you're seeing on my screen is just a day separator. This just tells you this is one day, this is the day before, and that's the day before. I always trade on the 1 hour time frame. I mean, I prefer the 4 hour and the one day, but I'm more of a person that likes to see his results within a day or two rather than, in a week or a month's time, because the markets are getting more and more and more unpredictable, but predicting them on a short time is a little bit easier. Okay. So, pivot points. Now that we've plotted, oh, 1 second here. Sorry, I got a cold. So, okay. We plotted our pivot points right here, and now we want to look for our exhaustions that are always hovering around our pivot points. That give you double confirmation that the market is going to reverse. Consider the pivot points as a wall. Now you can see the pivot points say R1, pivot point, S1. All this numbers doesn't matter. Just look at them as a wall. Just consider them a barrier and nothing more. Okay? So now for example, let's say this is today's market. Okay? And we have these pivot points plotted right here. Now, what is the proper way to read a pivot point? Any guesses? Okay. Okay. All right. Now, whenever you're dealing with pivot points, what you want to do is you want to always look at 3 days worth of data. Okay, not many people know this, and not many people have experience with this, but it's very, very critical. Now, this is today's data, just for example. This is the day before, and this is the day before that. So that's a total of 3 now. Okay? Now, you get this exhaustion right here that you see. Let me point this one out. You see this exhaustion right here shows up, and it's bouncing off of a pivot. Okay? Now, so what do you do at this point? You buy. You buy at the opening of the next candle, just right here. Okay? Let me point that out here. Okay, you can keep your stops at the low, or you can keep a fixed price stop, or to your next pivot line, which could be any one of these lines from 3 total days. And where do you exit? This would be your first exit zone right here. This pivot line. Okay? Between your entry and your next pivot line, this whole area is what we call the guaranteed profit zone. Nothing will stop you in the way to achieve this many pips. Okay? Is everybody with me so far? Close these out. Okay, I'll show you guys more examples. Okay. See this exhaustion right here? There we go. We had our pivot line right there. This exhaustion closed above the pivot line. It bounced off of the pivot line too. Opening of the next candle we buy, which is right there. We would buy right there. Our stops can be at this point here. And when we're buying, how many? Let's look at 3 days worth of data. 1 day. Here is the second day. Here is the third day. So in these 3 days, what is the next pivot line on the way? See right there. This is the next one. From here to here, no stops. This is, again, your guaranteed zone of profit. Okay? Does it make sense to everybody so far? Okay, so we last discussed is these are our pivot lines and our exhaustion candles, and then we have our pivot lines that we've plotted. Now, whenever you're dealing with an exhaustion that shows up near a pivot line, this is what you're going to do. Once you get an exhaustion at a pivot line, at the opening of the next candle, you can enter long, which is like right about there. Okay, you can enter long there. You can keep your stop at your lowest tip, or you can keep the stop at the next pivot line below that. And your exit, your first exit should be always the first one in the last 3 days. Okay, this is day one, today's date, for example. This is the day before, and this is the day before that. So there's a total of 3 days. Now the next pivot line in these 3 days is right here. So this whole area is your guaranteed profit zone. Okay, let me clean this up a little bit and show you another example here. All right, let me get this out of the way. Okay, now, for example, this is the exhaustion right here. Okay, it's bounced off the pivot, and it's also bounced off this pivot. You can see the close is above that pivot, and we have tails that touch this pivot. Opening of the next candle, which is right there, we enter a buy, and as soon as we buy, where is our exit point? Let's look at 3 days worth of data. This is today, this is day before, and this is the day before that. So total 3 days. Now, what is the next line in these 3 days? We get them right here. So this whole area here, from when you enter to the next line, is your guaranteed profit zone. Everybody with me so far? Oh, yes. Sorry about that. Can you guys hear me better now? Okay, great. Okay, Ram. Okay, so everybody's understanding it so far. Okay, let me show you guys more examples. Now, let's take a look here. Here we go. We have an exhaustion here. Okay, bounced off of a pivot line, and our exit. If we enter on the opening of the next candle, which is right there, and we look at 3 days, this is today, this is the day before, and this is the day before that. So a total of 3 days. And our next line from where we enter is right here. So that right there is our guaranteed exit zone. After that, you get into the risk area, and it depends all on your analysis and if you have another strategy or not. But this right here you will always get. Okay? All right. So everybody's understanding the fact of how exhaustions work. Now, exhaustions, they need this extra filter, which is the pivot points, to support them. Now, what else do you need in the market in terms of trading professionally? Okay, let's take a look here. Now, the question is, does exhaustions work all the time? Yes, they do. Yes, they do. Okay. As long as you are pairing it with something, it will always work. If you're using it alone, it will not work. Okay. Let's take a look here. Let's take a look at the current market. You see this exhaustion with the live market that's running right now? This exhaustion formed, and where is the next line in the last 3 days? For this is today's date. Okay, this is yesterday or the day after Christmas, and then this is the third day. So we entered at the opening of the next candle, we sell, and where do we exit? This is your guaranteed exit point. Okay, makes sense? Okay, so for example, if you were trading this trade today, how many pips is that? Okay, you made, let's say 7, 8 pips over here. Now, on the other examples that we saw, for example, this one, we've made how many pips for guaranteed pips? 31 pips. Okay, so 31 pips. Coming back to the question that I asked you guys in the beginning, what is a sufficient number for you guys to earn? Not on a daily basis, but what is maybe on a monthly basis? What's something that's acceptable? Because you are going to have losses. You can't accept something profits on a day-to-day basis. Ram, yes, we only enter on current day, yesterday, and the day before. You look at only these 3 pivot lines. Okay, 1,000 pips a month on average. Okay, okay. All right, so let's take a look at this. Now, how many of you guys know what correlation is? Remember we went through the PowerPoint and this part right here? Always keep a bird's eye view. Let's give you an example what a bird's eye view means. Okay. Now, let me remove everything on the screen. Okay. Now, on this particular day, what do we see Euro USD doing? Euro USD comes down, it goes up, and then it goes down. What is Pound USD doing on the same day? Let's take a look. Comes down, it goes up, and then it goes down. Oh, what a coincidence. Okay. What is US dollar Canadian dollar doing? It's going up, then down, then up. Okay, so this is opposite. Okay, now, what is the reason why all this stuff is happening? Why are they correlated in one way? Okay, Ram says currency tend to move parallel because of their fundamentals and trading zone. Okay, now one of the main reasons why this is happening is there is a common pair in between all this, which is the US dollar. Okay, now most pairs they will move according to each other on a certain scale. They'll move together up and down, or they'll move exactly opposite. Okay, so if you guys want to take notes, let me tell you what pairs go together. Euro USD, Pound USD, Euro Yen, Australian Dollar US Dollar, New Zealand Dollar US Dollar. These pairs work together in same direction. Pairs that go in the opposite direction of these pairs are US Dollar Canadian Dollar and US Dollar Swiss franc. Okay? Just keep these in mind. Now, lately the US dollar Swiss franc is not following the trend, but it doesn't matter. Even if you make a loss in US dollar Swiss franc, you're afloat, no problem. Okay, now let's look at how to maximize profit. Now, in this particular trade that we took, we entered right here, we exited at the next pivot line, 29 pips. Okay, big deal. 29 pips. A scalper makes 29 pips every now and then by risking his life. But is 29 pips really what you're looking for? Now, you've done your analysis, right? You figured out that it's going to go up. You know where it's going to exit for your guaranteed profit. So once you enter your orders, do you have to watch the screen? No. You can literally walk away from your computer and say, okay, this is done. Now, in terms of correlation, do we have another pair that's doing something similar? Aha. Let's take a look at here. Pound USD, same thing, exhaustion, bounced off of a pivot, stuck another pair. New Zealand dollar, US dollar. Okay, we have an exhaustion, but it did not exactly bounce off of a pivot, but close enough. Okay, so let's leave this as a maybe. Let's take a look at Euro Yen. Oh yes, same thing here. Okay, now let's take a look at the opposite pairs. Do we have sells in US dollar, Canadian dollar, and US dollar, Swiss franc? Not too clear. We can see them here, but not too clear. Let's take a look at US dollar, Swiss franc. Here we go. We got nice exhaustion, but not too clear when it comes to the pivot points. So now you set your order for Euro USD for your guaranteed profit. You don't want to be too greedy. You don't care. You want to get that 37 pips out of the way and you want to put it in your pocket and then take your wife out to dinner or your husband out to dinner. Okay, so Euro USD done. Pound USD, it goes together. Okay, next pivot point up here, done. Put your limit up there. You enter at the opening of the next candle. We have 51 pips guaranteed on this one. Okay, US dollar, Canadian dollar. If you open a sell blindly, assuming correlation, and you sell it at the opening of the next candle, like let's say right here, going towards the next pivot line, it gives you 46 pips. Okay, again, this is blind. This is not with any analysis. You're only using correlation as your theory to collect pips. US dollar, Swiss franc, same thing. You're using correlation as your theory to collect pips. Opening of the next candle, you open it here, and let's say you take it to the next pivot, you make 6 pips off of this one. Okay, not much, but hey, 6 pips. All right, now New Zealand dollar, you buy. Opening of the next candle is right here, going to the next pivot line, which is all the way up here. 47 pips. Euro yen also is a buy. Opening of the next candle, which is right there, going to the next pivot line, which is right here, 38 pips. So can you not put together 150, maybe 200 pips very easily just by understanding one or two pairs? If you are an expert in any one of these pairs, why not maximize your profit? Just by understanding the basic fundamentals of correlation is that currencies move together because there's always a common factor. Now, if you see a sharp movement, let's take a look at any large candle that you see, and you start seeing this in all the pairs, you don't need to open up forexfactory.com or any other news channel and find out, okay, is there a news release coming up? No, you can see it on your screen. You can see the reality. A lot of times you'll hear one thing on the news, but something else happens on your charts. So you can see reality by watching your charts. You can see, oh, the US dollar is moving. That's why all my pairs are going crazy. Or, okay, this is a euro movement because only all the euro pairs are affected by this. So you can easily understand what's going on. Why is this something happening? You don't need to get into all of that details because you're in as a trader, you want to make a quick profit and out. I don't think any of you guys are actually attending a seminar to actually become an analyst for a bank or a hedge fund specialist. Okay? All right. Ram says, do we place orders only if we see exhaustions on all the correlated pairs? No. As long as you have more than one exhaustion candle that is near the pivot points, you can blindly take the rest. Okay? Now, let me see if I can find you guys another example here. Let's take a look here, 24th October here. Let's see if this is a decent example here. Nice exhaustion right here. Everybody can see that? Let me delete all. Okay. Okay, nice exhaustion right there. All right. Let's draw our 3 days to understand. 1, 2, 3. Okay. Our what you call it? Our exit. So we enter at the opening of the next candle, which is right there. Let me move the mouse there. We enter here. Where will we exit? The first pivot line in the next 3 days. It's here, then here. There's one a little bit higher here. That is the closest one to our entry. This right here is your guaranteed pips. Let's calculate from here down to here. 33 pips given to you. Now, this is euro yen. What pairs move together with euro yen? We got euro dollar, pound dollar, Australian dollar, US dollar, New Zealand dollar, US dollar. So let's take a look at these pairs on 24th October. 24th October. Now, what time was this? Approximately 10 o'clock on my chart. Okay, let's take a look at 10 o'clock on my chart again. Do we have a downtrend here? Okay, just going to show you how correlation works. It also took a dip. Let's take it Australian dollar, US dollar on 24th October. Okay, 24th October at 10 o'clock. Sorry. All right, here we go. 24th October at 10 o'clock. Boom, also down. One whole candle. US dollar, Swiss franc. 24th October should be a buy because it's an opposite pair. 10 o'clock, it's a buy. Long candle here. It goes up to, all these pairs go up to the next pivot line, always. US dollar, Canadian dollar. 24th October should be also a buy. Okay, this, no movement. 10 o'clock, we had a slight movement only. So let's say this took you out, gave you a loss of 25 pips. Okay, hit taken. Pound dollar, 24th October. Should be a sell on 10 o'clock. Here we go, from here all the way down. Okay, here's our next exit. So you probably didn't make so much on this one. And then euro US dollar, 24th October at 10 o'clock. Should be a sell. Oh, what do you know? We have another exhaustion that looks just like it. We got your double confirmation. It's bounced off of one, not one, but two and three pivot lines practically. That's a good trade to sell. Okay, so Euro Yen and Euro USD is the only pairs that gave us a exhaustion that's bouncing off of the pivot line, and blindly we took all the other pairs based on simple aspects of correlation, and we added a lot of profit to our bank. Okay, from here to here, 68 pips guaranteed profit on this one. So if you add everything together and also the US dollar Canadian dollar that we had a loss, you're still up at least 100 pips in a matter of couple of hours. So using correlation is good because you can counter hedge your pairs. Now, what if you're a US dollar Canadian dollar specialist and you made a loss? That loss is a pure loss. But if you're using multiple pairs, there's a big chance you can cover your losses as long as you're understanding from a bird's eye view what the market is doing. And there's nothing better than an exhaustion to tell you what the market is doing. Okay, everybody with me so far? Okay, let me go through the questions real quick. Preferred time frame, 1 hour. Yes, this indicator, I'll get it for you guys. I'll email everyone, or you guys can get it from urbanforex.com. It will plot automatically on a daily basis. It does not change once it's plot. Excuse me. And I mean the yellow thick lines you drew. The yellow lines you have to draw on your own. This is just a line I'm drawing just to show you. But the pivot points are going to be there by themselves. Okay, everybody with me so far? Yes, okay, great. Let me just take a look at... Perfect. Okay, now, let's see if I can find you guys some nice examples here too. Now, one thing I'm gonna try and avoid you guys from doing is trading breakouts. Breakouts don't really work. They are just an indication that the market is... Okay, let me put it this way. Here is a zone, okay? There's one up here. and here. Okay. These are the zones. Okay. Market went up, down, up, down, up, down, crossed up. It went above all the highs. At this point, everyone is buying, thinking that, okay, we've created new highs more than ever before. Buy, 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 buy. Once everybody is buying, bigger players, bingo, jackpot, sell, move the market down. What do you know? What do we have here? An exhaustion candle. Takes the market all the way down. Okay? Goes up, comes down, goes up, comes down. Boom. We're doing the same thing here now. We crossed, let me move this line down here. We've crossed the low of the previous day and we're like, okay, this point, herd mentality, everybody is selling. What do you know? Exhaustion pops up. Market moves back up. So keep an eye out for these tails. These tails, they're just false indications for a lot of people thinking that the market's going down, but it actually is. You have to wait for the candle to close. Once the candle closes, you have a better picture of what's actually going on. Because if this was red and it was down till here, maybe a lot of you guys would have sold, thinking that, okay, the market's heading down. So you want to avoid trading live data. Wait till it's closed and then test it out and do your analysis. Okay? All right. See here. Nizar Roy. I don't understand what you're asking by subscription. There is no subscription. You guys, if you want to make a donation, you can, but I mean, there is no subscription for any of this stuff. Could this be avoided if we waited for the candle to close as a bullish or bearish to avoid false breakout? Just don't even look for breakouts. It's a very big industry, breakouts, because your stops are very predictable where your stops are going to be, and as long as you're not a big player like 10, 20 million dollars, your stops are going to be hunted. Okay? If I was a broker or a market maker and you put your entry here and your stops here, I'm going to take you out. Or even if you put your stops down here, I'm still going to take you out. Because I have the power to manipulate the market at least that much. It's not so much. Okay? Now, another thing is, everybody thinks that brokers have this magic crystal ball of the same screen that we see and they trade also. No, they don't do that. They don't see any of this stuff. All they see is buy and sell orders all over the place. They see a whole bunch of sells here. Okay, they're gonna knock this place out. They're gonna see a whole bunch of orders here. Okay, knock this place out. That's how it works. Okay, as long as it's within a certain limit of range, they can take it out. Okay, now stops. Okay, so we've took our 30 pips of profit, we've boosted it up to 200 pips, 150 pips, or 100 pips, let's say. Is that still enough? What do you guys think? Is there something more that can be done? Can I explain something more to you guys that can be done? What do you guys think? Is there something else? Okay, let me explain to you guys here. Let me see if I can find you a nice example and show you what can be done. Now, when you're dealing with stops, your stops can add in an extra 20% to your account if used the right way. And the right way, I shouldn't say the right way. The way I use it is the harmonic method. What is the harmonic method? Let's explain this. Now, we sell here at our exhaustion. We know our guaranteed exit is right there. So This is for people who are really busy and they don't have time to trade. What they can do is they can place in their orders, place in their limits, walk away, come back, profit, watch, looking them right in the face. But for those of you who do have time to sit in front of your PC, you can extend that profit more. Okay? Now, even though you know this is a guaranteed profit, once the market is moving in your favor, you do not use a limit. Okay? Once it starts moving in your favor and you reach your guaranteed profit zone, you start moving your stop loss closer and closer to break even. And if you see the market move super fast, you move your stop at the same speed. If the market is going slowly to your slowly into profit, you move your stop slowly as well. You don't want to rush your stop. So never use a automatic stop trailer that's provided by a broker, because that goes by numbers. It does not go by market movement or market harmonics. It will not mimic the market. If you want to stay alive in the market, you do exactly what the market is doing, which is not the same thing every day. You must be different. Okay? Um, let's go through this. Okay, Perry has a question here. Are you saying the take profit is the closest pivot over a 3-day period? Yes, that is exactly what it is. It's the closest. So let me show you an example here, Perry. Now, if you enter you look at this exhaustion here. Okay. Now let's go through the full trade here. We got that exhaustion here. We have it's bounced off the 3-day period pivots. Okay, it needs to bounce off of any one. That's fine, but we have all 3 days. 1, 2, and 3. Okay. And from here, we open a sell at the opening of the next candle. Let me double click this. There we go. Right there. And then we go down all the way to our next pivot line. There's one here, and one here. This is the closest one. So we draw a line there. That is your exit. From here to here, nothing's going to stop you. Okay? 4th day, too far back. 3 days only. Okay? Keep that in mind. All right, let me know if that answered your question. Suggested stop loss, a pivot point on the other end. That is my suggested stop loss. Okay, Ram, increase stop loss range? No, never increase a stop loss range. If you set a stop loss, don't increase it. That's a mistake I've learned the hard way when I started off trading. Do not increase stop losses. What's the full name of the indicator I use? I have no idea. Pivot points. But I'll get it for you guys on urbanforex.com. You guys will have it there for download. I don't know how you can open it up and read it and stuff, but I've just picked up a pivot point online that plots every day. Okay, Ram, the stop loss is above the exhaustion candle. Yes, it's going to be above or below the exhaustion candle, depending on which way you're trading. Okay. Yeah, we'll call it the Naveen indicator. Okay, so let's go through this now. Okay, let's see if I can show you guys as time is running out here. Let's see if I can show you guys one example again that has full correlation and everything. All right, let's take a look here. Okay, we have an exhaustion here. Boom, right there. Okay, last 3 days. You can see here it's closed below this pivot line. It's bounced off of this, and also the day before. It's right there. So you can see this is a really strong area. You already know it's a strong area because we have 2 days worth of pivot lines holding it. And the last 3 days, nothing has gone above it. So as you look at this more and more, you get a more sense of feel of, okay, this is going to work. And it has to work. Okay, let's take a look here. Okay, I'll go through the entire thing, Ram, and you let me know if you still have a question. Okay, so we see this exhaustion. Okay, and here, let me pick somebody from the audience. Who do we have here? Don't worry, I'm not bullying anybody. I just want somebody to learn. Um, let's see here. Uh, Conrad, are you watching? Yes, okay. All right, Conrad, we're gonna go through this step by step. All right, so we have the exhaustion candle here, okay? And we're gonna open at the very next candle. Where would be my exit? Okay. While Conrad is getting me that information, I want everybody else to tell me what pairs correlate with this Euro USD. Okay, perfect, Conrad. 1.3774, which is right here. Bingo. Okay, that is your guaranteed profit right there from here all the way down till here. Nice 40 pip movement. Okay, so we're looking at Euro USD. What other pairs match with Euro USD? Okay, good. We got some more pairs here now. Now, before we get into that, where would you keep your stop? There's two options. One is the tip of your exhaustion, or the second one is your previous pivot point. Okay. All right. So, yeah, good job, Ram. You got all the pairs, and US dollar Swiss franc and US dollar CAD are opposite. Okay, so let's take a look at this. Let's take a look at this from front to end. 4th November, this was. Okay, pound USD, 4th November. Let's go. Um, 4th November. So we had 40 pips on Euro USD. Let's keep track of this. Somebody keep track of the pips. 40 pips on Euro USD. And the pound USD on the same time frame, 4th November at 1500 hours. Okay? 4th November, 1500 hours, we would also sell going to our next pivot point, which is right there. 30 pips on pound US dollar. Okay? Also guaranteed profit. Move on. US dollar Canadian dollar. Conrad, are we going to trade the same way or the opposite way for US dollar Canadian dollar? 4th November. Opposite. Perfect. Okay, so let's take a look at that. 1500 hours on 4th November. 13, 14, 15. It's right there. So not too much here. We got to only 22 pips, US dollar Canadian dollar. Move on. US dollar Swiss franc. Also opposite. 4th November. Let's take a look. 1500 hours. Okay, now we have an exhaustion here too. Looks even more beautiful. Here we go. We got some exhaustions lined up here, bouncing off. 1500 hours, which is 14, 15. Here we go. Going from here all the way up to the next pivot line, which is right there. 20 pips. Or, yeah, 22 pips. US dollar, Swiss franc. Australian dollar, 4th November. This is going to be the same direction as Euro USD, not opposite. So it's going to be a sell. Okay? 1500 hours. Right there, 1500. Next pivot point. 41 pips. Okay? New Zealand dollar, 4th November, 1500 hours. Sell also. From here, we got to sell from here to the next pivot line. 16 pips, 1-6. Okay, and Euro Yen, 4th November, 1500 hours. Sell also. Nice big exhaustion candle, mimicking the Euro USD. 1500 hours, we take a sell here. Going to our next pivot. Unfortunately, this was too tight. We didn't get the whole move. 14 pips. Okay, so what is the total count that we got in terms of all these pips? So you can see that when you're looking at exhaustions and pivot points, yeah, 100 and Perry says 185 pips. Okay, so all this happened in a matter of a single hour, just one hour of the market. So Do you need to sit in front of your charts and eyeball this thing day and night? No. You can actually come look at your charts every hour at 5 or 10 minutes before the hour or the candle closes. Take a look on all your pairs. Is there an exhaustion? Is there not an exhaustion? If there is, sit down, place your trade. If there isn't, walk away. Spend time with your family, or or your girlfriend or boyfriend, whichever you like better. But that's the thing. Forex trading should not be so difficult, and it should not consume all your time because it's really not that difficult. And there is a lot more to this. I am just giving you guys a quick and fast way to jump into the Forex market because some of you guys I know that have been with me before. So I know you guys are a little bit professional, but some of you guys I've seen new names and I think you guys are newbies. So this is something you can jump in, get ready, and get going. You know, because there's nothing better than making profit and boosting your confidence. Because if you start getting a losing streak, your confidence goes down and you start losing more trades and more money. So it's a downward slope. Okay. Now, I'm gonna pull up to another screen. I just want any one of you guys to point out. Okay, let's take a look at this one. This is a nice and clean exhaustion here. See this one here? Nice move up and exhaustion. Okay, I'm not going to go through this one by one, but I can at least scroll through. Okay, this is 24th November. We had a sell on Euro USD. Okay, 24th November. Let's go down. Okay, 24th. What time was that? Just a second here. 1100 hours for a sell after 1200 hours, sorry. So this one right here. Okay, same thing. It sold. Australian US dollar, 24th November. So if you just follow this concept, you'll do what good. So as of now, is there any questions until everything that we've learned, in terms of exhaustions, in terms of stop loss, correlation, your exits? Is there any questions whatsoever from front to end? Okay, we also have a sell, 1200 hours there. US dollar Swiss franc should be a buy on 24th November. There we go. 24th November should be a buy at 1200 hours. You can see that's a really nice profit, that one, on that one. Okay, so let's see what you have here. Ram says, I have a friend that told me that Sunday gaps trade towards the direction of the gap on all pairs because if there's that's where the market wants to go. What is your take on this? Okay, um, there there is actually I am honestly I do not have a insight on the gaps that are created over the weekend. Um, yeah, I'm sorry. There's nothing insightful that I can share with you on that. Okay, any more confirmation using RSI or CCI? No. RSI and CCI is only useful to use if you want to use divergence. But other than that, there's no use of plotting those indicators. And if you want to know how to use divergence, obviously you can go to urbanforex.com. We have some divergence strategies over there too, when we explain it completely how it works. Okay, so any questions from anybody? Okay. What we're gonna do for tomorrow's session is I'm gonna give you some more of my inside tips and tricks on maximizing profit, because as of now, everybody's got the strategy down. They understand how to enter, how to exit, and how to do it properly where it's guaranteed. You don't have to walk away thinking that, oh my God, what if I don't make money? It's set. And even if there's a loss, it should not be in all pairs. It should be in like one or two pairs. I will always be available on Urban Forex. You guys can always post charts and stuff like that. I will be able to help you guys as well. This is my favorite strategy. If many of you guys ask me this question, this is my favorite strategy. Did I have breakfast? No, thank you. Let's see here. So tomorrow we're gonna go through some more tips and tricks on uh, maximizing profit, and then I'll get you guys to our forums where you guys can obviously discuss the strategy more and more. I will be there daily. I have staff there that's going to be daily. We have appointed interns that are trading the stuff day and night. So there will be lots of pictures, lots of examples. Um, also, any homework? No. Actually, yes. Go through all the exhaustions, go through all your pivot points, understand the concept, and then tomorrow when we come back, you guys will really have questions tomorrow. Because right now, seeing it from me doing it, obviously it looks nice and rosy, but I want you guys to actually take a look at your charts and try them out, and then you let me know tomorrow. Because we're meeting again tomorrow at the same time. So you let me know tomorrow if you have any questions, and I will be happy to answer them. Okay? Um, can you include me to your favorites? You are everybody who's on the webinar is all it's on our emailer list. Whenever there's a webinar, you guys will be emailed first because you guys have done a lot of promotions and stuff to get on here. So you guys are going to be on a priority list to get in. Okay. All right. So that's about it. There is no more questions, and I thank you all for attending, and I will see you guys tomorrow at the same time. Should be 8:30 EST. You're welcome. Take care. Have a good one. Good night. Okay. So let's get started here. Okay, so welcome to the second part of the webinar from Urban Forex. And before we begin, just like to introduce myself. My name is Naveen Prithiani, and I will be your speaker tonight. And I'm gonna basically share with you my own strategy that I trade. And a lot of you guys kept emailing me on urbanforex.com asking me that which one is my favorite strategies from all the ones that I've shared on the site. And this is the one that is my most favorite strategy. I had this as a premium strategy. I used to only share this with a lot of premium clients. I've trained people in the Middle East. We're talking about royal families. I've trained some bank professionals. So we've trained a lot of people. But now I'm releasing it out to the public. I think it's time that we share this information with everybody. Okay. So let's get started here. If you have any questions, do stop me with a question, and I will pause and look at your question as much as I can. If I do forget, I will get back to it. Don't worry. Okay, so a quick recap from yesterday. Let's go over that. All right. Now, before we begin, we'd always like to let you guys know that Forex trading is an investment and not a job replacement. I'm not going to go through the disclaimer. Everybody knows the disclaimer, and it's understood that Forex is risky and is not suitable for everybody. But this is our disclaimer that we give out, our special disclaimer that we want everybody to be familiar with. So yeah, Forex trading is not an investment. It is an investment, sorry, and not a job replacement. So once we understand that, things will start to open up. Okay, stop trying to aim for pips on a daily basis. Horizon, your aim is to grow capital and nothing more. It is not to replace your $5,000 or $10,000 a month job. Okay, now never trade on moving data. If you're on the charts on let's say 1 hour, 4 hours, or even 15 minutes, whatever your preference of time frame, Always look at the candles that are closed and make your decision based on them. Do not make your decision on the candle that is running. Okay, that will make you get false indications and it will make you do stuff that you did not plan. All right? Okay, stick to a higher time frame as much as possible. My personal preference is 1 hour, although it is preferred to be on the 4 hour or daily charts, but 1 hour is something that I like because I like to see my results a bit sooner. Okay, anything lower than that is death. Okay, next thing, trust your analysis. Okay, if you've opened a trade for a reason, it's because you've done some research, you've done some analysis. When you close your trade, do it for the same reason. Do not close your trade based on what you see on the current moving candle. This is why you don't trade on moving data. Stick to the plan. Okay, and lastly, always keep a bird's eye view. Okay, looking at one pair is not going to do you any good. Looking at multiple pairs gives you an idea of what is going on in the market. Once you understand that, milking pips is piece of cake. Okay, now let's get going here. Now, in today's lesson, we're pretty much gonna, first of all, obviously I'm gonna give you guys a recap because a lot of you guys are new. I'm gonna give you guys a recap of what we did yesterday, and I'm gonna show you some more new cool tips and tricks that you guys can use and probably will be shocked. Okay, so going back to the very, I guess, the law of business, the law of transactions, anything, the law of investing. You know, what is risk to reward? You know, everybody should understand that when investing in anything, when it comes to properties, real estate, the stock market, equities market, or the currency market, anything that you invest in that has high risk usually will have high reward. Okay? If these two are together, you're on the right path. Now, same goes the other way around. Low risk is equal to low reward. If these two are together, you're on the right path. Okay? There is a moderation also where if there's a medium risk is equal to medium reward. Okay? Anything too extravagant out of these two, turn on the green light and turn on the red light and be like, okay, something's wrong here. Okay? But there is one exception that we can see in the currency market, which we use at the banks. Okay? How can you bend this law and keep your low risk while getting a high reward on the other end? Now, the high reward is not guaranteed, but you can add in a high reward very, very quickly. If not, you always have your low reward ready for you regardless. Okay, I'm going to explain that today to you guys. Okay, so that is what we're going to cover. So just remind me, in case I do forget this, to show you guys that this is a really cool topic. All right, now, before we begin with the recap, I wanted to share one thing with you guys I want to share one thing with you guys that I didn't share with you guys yesterday, is when you do your analysis, for example, let's say you decide to sell over here. Let me get my arrow up. You decide to sell somewhere here, okay? And you're selling, the market's moving, you made profit, you closed, okay? Very simple. You entered, you exit, made a profit, walked away. Now, what if you have a different scenario? What if you bought somewhere over here? Okay. Now this is an hourly chart. This is 1, 2, 3, 4, fifth candle you probably made some profit, but until 4 candles, the market's just hovering. Okay. So what do? Do you hold or do you exit? Okay. This is a very common question that a lot of people have, and they do not understand that holding on way too long can be very, very deadly. Okay. Now, when you bought over here, you must have done some analysis. There must be some reason that you're buying. You're obviously not looking at 10 years worth of data to buy right now, right? You've probably looked at something around here, around this much. Okay, that is how much? One, two, three, four candles maybe. When you look at the past of four candles to make a decision, you want to project your holding period of four candles also. You do not want to go past that amount. Okay, anything after that, you're risking everything. Okay, it's no longer an analysis, it's a gamble. Okay, so your analysis is only valid as far back as you do your research. All right. Now, yesterday's recap. What is the main thing that we discussed yesterday? Whoever was here yesterday, can you guys tell me? I like to make my webinars interactive. I'm sorry, but I'd like to know people are learning. But yeah, if you guys can tell me, what was the main topics we discussed yesterday? Also, can everybody see my screen? Okay. Uh, okay. Okay. Yes, 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 yes. I can see your screen. That's right. Good, Perry. Um, Perry says 3 days worth of data for pivot points and exhaustion candles. Okay, so let's get to the basics. Exhaustion candles. Now, what we discuss here on this webinar is simply this: entering, piece of cake; exit, piece of cake; stop losses, also piece of cake. The main problem is leaving pips on the table. Okay, based on whatever you guys learned yesterday and whatever we're going to recap right now, making a profit is no longer an issue anymore. Making a profit is always going to be there for you guys. You guys will always make a profit. Now, it's just a matter of how much profit can you make. Okay, that is a very critical thing because that can be considered as a loss if you're just letting go of some profit that's on the table waiting for you. Okay, I consider that as a loss. Okay, so let's take a look at here. Um, Exhaustion candles. Many of you guys, I personally call this exhaustion candles because of how it looks, but many of you guys can call it, many of you guys call it already hammers, pin bars, and there are several other names on the internet for it. The reason why I call it exhaustion is because you can see here the market opened, it went in one direction as far as it could, creating this long tail, and then it came down and it closed near the open. Okay, creating a small body and large tail. The body is always going to be smaller than the tail. Okay, there are exhaustions all over the place. Excuse me. I'm going to point to some right now. Right there, right there, right there. Yeah, so there's exhaustions everywhere. Okay, now exhaustions cannot be used alone. Okay, they have to be used together with something. Okay, let me. Okay, what is basically an exhaustion? Does anybody remember from yesterday? Why do exhaustions show up? Okay, and when they do show up, what does it mean? Okay, I'm going to point to some more. So for those of you who were not here yesterday, and also for those of you who were here yesterday, actually, can get some extra experience. Just watching these exhaustions all over the place. Okay, now do not confuse an exhaustion with a doji. For those of you who do not know what a doji is, you guys can Google it whenever you guys get a chance. A doji is basically something that looks similar to this, where the open and close is practically equal, and there's a tail on top and the bottom. Okay, and exhaustion will have a large tail on one side, and the other side will have a smaller tail, much smaller tail. We don't anything too large is invalid. Okay. Perfect. Perry has responded saying that the exhaustion candle gives us a possible reversal. Excellently said. Okay, it's a possible reversal. It's not guaranteed. Now, how do we make it guaranteed? Yesterday we discussed some techniques where profits that we look at is practically guaranteed. Now, I know that's a big controversy that there's no such thing as guaranteed profits in any business. You know, that is true. I agree, but there is this method that's been holding on really long. I'm sure it can be proven wrong in due time, but as of now, it's been working really, really well for the last probably 5, 6 years. So let me share with you guys how this stuff works. Let me insert pivot points. Okay. Where is the pivots? 20. Sorry. Okay. Now, for those of you who were not here yesterday, pivot points. Now, one thing that I want to share with you guys, pivot points. Whatever you guys know about pivot points, just put them aside or forget about them. Because what I'm going to share with you guys today about pivot points is going to be the most valuable information you've ever had. Okay, pivot points is like should be your center point of attention when trading, because pivot points are not. It's a calculation of the average of yesterday's movement. Okay, now let's say, for example, this is today's date. Okay, there is this yellow line, this blue line, this white line. The white line stands for R1, which means resistance. Blue line means P, means pivot. S1 means support. All this stuff does not matter. Just look at the lines as a barrier. Okay, they're nothing but a wall. This wall is going to stop the market for you. Okay, just look at it very basically like that, so you understand this very easily. Okay, now, if this is today's date, we want to always look at pivot for a total of 3 days. Okay, that's one right there. Here's another day, it's 2 days, and then here is our third day. Okay, total of 3 days. We want to look at all the lines of these 3 days. Otherwise, pivots by itself on that very day cannot be 100% useful. Okay, now, same thing goes here. Why do we do this? Take a look for yourself. Why did this market over here, why did it halt right there? Why not down to the pivot? Because of yesterday's pivot line is right there, practically to the tip. Okay, and this happens all the time. All right, so moving on. Now, let me explain to you guys how all this stuff works. Now, when you have an exhaustion candle, you want to make sure it's bouncing off of a pivot. Okay, let's show you some examples here. Let me delete all this. All right, let's show you an example right here, because see some nice exhaustions here. See some exhaustions here, right? A couple exhaustions here. See an exhaustion on the other end too, right here. Okay, so let's say this is today's date. Draw three segments. That's 1, that's 2, and that's 3. That's all 3 of our days. Okay, we want to use the data from all 3 days. Okay, so market comes down, creates an exhaustion. Now this exhaustion tells us the market wants to reverse. It wants to buy. And how can you see this? If you don't understand exhaustion, you can put your arrow on the body and you'll see that it looks like a rocket. It wants to go in the opposite direction. Okay, so that could be your indication of what the market wants to do. Now, it wants to go in a buy direction. Now, once you get this exhaustion candle and you see that it's bounced off of a pivot line, you want to buy at the next candle. Okay, opening of the next candle, which can be any one of these exhaustions that you like, no problem. Okay, let's say this last one. Okay, where are you going to keep your stops? Okay, I think John, that was your question. Your stops and how do you maximize profits using stops? Okay, we'll get to that. Stops, one of two things. You keep your stop at the tip of your exhaustion. That's one way, or my preferred way is to use the nearest pivot line after the tip of the exhaustion. Okay, not this one, but the one below that right there. Okay, that would be my preferred point for keeping your stop. Now, let's move on. So you got your stop now. Now, where do you exit? Okay, people here from yesterday, where do you exit on this? Can you guys give me a number if you can see it? Because even I can't see it properly. While you guys are looking at that and get an idea, give me a rough estimate. I will answer. Okay. Okay, 3739. Good job, John. Okay. Now, John says 3739. Let me put a line right there. 3739 is right around there. Okay. Why did he say this area here? Okay. It's because from where you entered, the next pivot line from where you entered in these 3 days of data is right there. Okay. That means this area here is your guaranteed profit zone. Nothing is going to stop you on the way to that. Okay? This happens in all pairs, every currency, preferably 1 hour and above. Okay? Yes. This is, how big of a movement is this? I'll show you. Let's see here. It's a movement of 28, 29 pips. Okay? All right. Now, that is how we do, this is this trading strategy that I taught yesterday. Now, that's just doing a recap of what we did. Now, getting to the advanced part of this, all of this. Now, just trading these guaranteed profit zones means nothing, okay? Because 30 pips is nothing. I mean, we went through a various list of people asking people yesterday, what is your preferred amount of pips you want to make in a month? And in fact, let me ask you guys again, how much pips do you desire in a month? What is a good suitable amount that you think is good in a month if you keep the risk low? What is the good amount? You know, so let's have everybody answer that question. What's a good amount you're looking for? Okay. Michael, you say 100. Is that in a month? Is that in a week? In a day? A month. Okay. 100 pips a month. Okay. So people are getting satisfied by 100 pips a month. Okay. Very slow, very steady, conservative. I like it. Good. Uh, Mr. Simon says 100 a week. Okay. Samuel says 1,000 pips a month. Okay. Okay. Low risk, high pips. Very good. Very good. Okay. So 100 pips a week is 400. Okay. So we have the whole range here. Mr. Gareth Lai says 500 to 1,000 pips in a month. Okay. So our threshold is 1,000 pips in a month. Our medium is 400 pips. And then our low end is 100 pips. Now, what if I can take the medium threshold of 400 pips that you're looking for in a month and get that to you in a day? Forget a day, in a couple of hours. Okay, this is what I'm going to teach you guys, and this is what I taught yesterday, and we're just going to recap it really quick for the next 5 or 10 minutes, and then we're going to get back to a little bit more advanced stuff. Okay, now correlation in the Forex market is very important. Do you guys recall that I talked about the bird's eye view in our where we go? Here we go. Yeah, that always keep a bird's eye view. You know, this is very important, and This is how all this stuff works. You guys might want to write this down if you guys haven't already. Euro USD, Pound USD, Euro Yen, Australian dollar US dollar, New Zealand dollar US dollar. All of these pairs move together in the same direction. Two pairs move in the exact opposite direction of these, which is the US dollar Swiss franc and the US dollar Canadian dollar. Okay? These two move opposite of these other 5 pairs. Just like you see on the bottom here, I have all these 7 pairs listed. These are my favorite 7 pairs. These are the same 7 pairs I do my forecasting on, which a lot of you guys are big fans of on forexwatchers.com. This is the same pairs that I love. Lots of movement, lots of pip potentials, and lots of liquidity as well. Okay, so now same thing goes here. Now we had an exhaustion here on October 20th. October 20th at what time? At 10 o'clock on Euro USD. Okay, somebody keep score of all this. Okay, we're going to do this really quickly. October 20th at 11 o'clock we bought. Okay, we bought to the next pivot line, which gave us 29 pips on Euro USD. Okay, let's go to Pound USD. Okay, let's go to, nice little exhaustion here on the current market. Okay, let's move on. What date was that? October 20th. Okay, October 20th. Okay, we got an error right there, actually. We want to buy on our opening of the next candle at 11 o'clock, going to the next pivot line, gave us 44 pips. Okay, now US dollar Canadian dollar, we're going to do the exact opposite. Instead of buy, we're going to sell. Okay, let's go to October 20th for 11 o'clock. 10, 11 right there. Okay, we sold right there, going to our next pivot line, which is over there, 29 pips. Okay, so you guys get the idea. If I go on, this thing's gonna add up all the way to like 250 pips or something. So, but you guys get the idea. As long as you know these correlating pairs, all you need is 1 exhaustion and 2 exhaustions. If you have 2 exhaustions bouncing off of a pivot line, you have a confirmation that this movement is not just for Euro USD. This is a movement throughout the charts because something is happening with the US dollar. What is happening? I could care less. I've worked in the bank a lot for that and I've really lost my mind. So I can care less what the dollar is doing. For me, as a speculator, we're in, we're out, we got some quick bucks, we're out for dinner. Okay? So that's what we want to aim for. Okay? Again, I'm going to repeat the list one more time. Euro USD, Pound USD, Australian dollar US dollar, New Zealand dollar US dollar, Euro Yen, all the same direction. Opposite directions, US dollar Canadian dollar, US dollar Swiss franc, move opposite. Okay? Okay, so far everybody understood the guaranteed profit zones and correlation? Okay? Once I get a yes from everybody, if anybody has a question, please let me know now so I can get you some recaps, maybe more examples, and then we can move on from there. Okay, let's go to the questions here. Let's see here. Okay, Samuel, yes. Gareth, yes, 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 yes. Okay, perfect. Ratchet, Mr. Simon, yes. Okay, let's go on. Okay, so okay, now, getting into a trade and making a profit like we discussed is now a piece of cake. Your son can do it, your daughter can do it, your boyfriend, your girlfriend, mother, father, anybody can do it now. Okay? All you need is these lines on your screen and an exhaustion candle. Okay? It's very easy to explain to anybody. Now, For people who do not have time to trade, okay, Mr. Bill, he has a question. Are these standard pivot points you are using? Yes, these are exactly. You can actually use a pivot point calculator and you'll get the same lines. Okay, but I'm using this indicator that plots these pivot lines automatically every day at 5 p.m. EST. Whenever the day changes, it plots it for the next day automatically, and it stays still. It does not move around. Okay, you guys can get the indicator from urbanforex.com if you guys like, because it's very easy if the pivot points plot by itself rather than you doing it manually one by one, because that's a big mess. So yes. Okay, so now turning a profit now, it should be very easy for you guys. And now that we've gone through the polls, we will hold weekly webinars for the strategy. So this gives you enough time to actually go try it out, come back with some more questions. I don't want to leave you guys hanging. Okay, so turning a profit is now everybody's cup of tea, but how much profit? Okay, what can you do with the extra profit that's there? For those of you who are busy, take the guaranteed profit, put in your orders, walk away. Okay, all you need to do is look at your charts every 1 hour, see if there's an exhaustion candle somewhere that's bouncing off of a pivot line, place in your orders, you know your limits as well, do it for everything, walk away. That's it. That's your investing. You're not working. You don't have to sit there and, you know, feed it your emotions. That's your investing. You're not working. Just remember that. So you walk away. Now, for those of you who do have time, who are available part-time or full-time for this, when I say part-time, I'm talking about 5-6 hours, then not only are we going to be playing with our stops, I'm going to also be teaching you some awesome, cool new techniques that is going to blow your mind, because we are going to bend the law of investments a little bit. This sector that we're going to talk about, low risk, high reward. Okay. All right. Now, let's get you some example. When you use your stops, always use the harmonic method. Okay. When I say the harmonic method, this is again for active traders. The harmonic method is basically, if the market moves in your favor quickly, you move your stops in your favor quickly. If the market takes its time to go in your favor, then you move your stops slowly and you trail it slowly. Do not use automated trailing stops that are provided by your brokers, because they cannot feed in logic. They can only feed in a number that you set. Okay? They cannot mimic the market's movement. Okay? Remember, always adjust to the market. You will stay alive. Okay. So let's get you an example. You're trading off of this pivot that bounced off, I'm sorry, this exhaustion that bounced off of this pivot, okay? This one right here. Market moves up all the way up to your guaranteed zone, which is right here. All 3 days of data is saying that the pivots are here. It's a very strong zone here, okay? Market reaches here. Those of you who are part-time, I'm sorry, not part-time, those of you who are just investing for the sake of it, got your money. Now, those of you who are sitting down, there's this extra profit that comes up. What do you do with that? Can you take that? And if you do, how much do you have to risk? How much do you have to put on the table to take that? Okay, are you going to lose what you've made? Okay, this is a question that comes up with everybody. Now, there's what you do. Once it moves up to your, your guaranteed zone, you want to start trailing your stops. Okay, you want to start trailing your stops to a point where you're very close to this line. Okay, as it moves up to the next pivot line, and you can actually get an idea from where you've entered to 2 pivot lines, this is a total of 130 pips. You can automatically understand that, okay, this movement is pretty much done. Because very rarely you will see, the pound dollar doing like 500 pips in a day. You know, I myself love home run shots too, but if home run used to come around every day, that would be great, but it doesn't. That's the honest truth. It doesn't. So don't get too greedy with this, but you can take it to the next pivot line. Okay. Now, moving your stops is very, very useful. Now, here's what we're gonna do when it comes to churning the law a little bit. Now, sorry, one second here. Yeah, sorry about that. Okay, let's continue here. Now, let's see here. Let me get you guys a nice example so you guys can understand. Okay. Okay, let's use this example. All right, let's say you've bought somewhere here. There was an exhaustion or something. You bought around here. Market goes up, comes down, continues up again. Okay. Now, at this point, you're not just relying on the exhaustion strategy that I've taught you. Maybe you might be relying on my forecast telling you which direction the market's going to head throughout the whole day. Maybe you guys are relying on moving averages. Whatever information from whatever resource you're getting tells you that the market's going to go long today. Okay? If you have that information and it's reliable and you trust it, then this is something you want to use. Okay? Market goes long, goes up, comes down, and when it comes down and you see it bounce off of an area and it goes back up, as it's going back up, you see this bounce, you want to draw some arrows from the body, the lowest body of the bounce area, and you see, does this have some strength in the past? You can draw it on the tails too, some of the tails if you want. Does this area hold strength recently in the past? And you can see, yes, it does. Okay? It does. It did not let the market cross above this in the past. And not only that, we also have a pivot line here. So what does this tell us? That what's becoming a support here was a resistance over here. So whatever you've bought from down here, you've had your stop, let's say 40 pips away. You've gone up, it's come down, your stops, you do not move. If you want to take this strategy, you do not move it at all until this happens. Comes down and it bounces as it's going up. You now move this trade's stop to 0 and you add one more position and you keep 40 pip stop loss on that position. Now, what do you have in your hand now? You have the same 40 pips risk on your hand, but you have two lots or two positions going in your favor if the market goes in your favor. Okay? So, if you look at it, if you even gain 50 additional pips, that 50 additional pips you've made with two additional positions. So what's actually happening is we're keeping the same amount of risk here that we've initially desired, but we're adding on a potentially high reward very, very easily and very, very quickly. Does that make sense to everybody? Okay. While you guys answer that, if you guys have any questions while you guys ask me, I'm going to pull up another example here. Hopefully I can find a clear example so you guys can understand. And then we'll use a little bit rough example. Okay, is the exhaustion candle same as pin bar? Yes, it's the same thing as a pin bar. I just call it an exhaustion, Mr. Simon. John, yes, okay. Okay, let's okay, let me see if I can. Now, the market is going to be trending for the next couple of months due to how the market has been going, the turmoil with the US dollar and all the other currencies around the world, you are going to see large swings. So trading in one direction it's going to be very beneficial. You're going to see a lot of swings, a lot of trending moves. Okay, here's a nice little indication right here. Okay, um, let me see if I can, where's the arrow? Okay, so you sell anywhere here. Just an example based on whatever method you might use. You sell anywhere here. Market goes down, comes back up, it bounces, and as it's going down, you draw on the body. And you can see, even tip if you want. You can see this held true just recently because it moved the market. So this is a strong area here. Okay, this is where you will add additional positions. Okay, so your first entry you might not get perfectly, but your second entry at least you will know where to enter exactly because you can see the market, you can mimic it. Okay, if you look at over here, it missed it. Okay, but it would have been a perfect shot, but it missed it, and that happens. That's okay. But if you do get it, you get it at pinpoint level where we're talking about 10, 15, 20 pips maximum movement before it goes in your way much stronger. Okay, now, so everybody with me so far on, okay, John, one more example would be perfect. Okay, I'll show you guys one more example. Let me open up another pair so you guys can take a look. Okay. Let's take a look at Euro Yen since it has a big movement. Okay, let me randomly scroll anywhere. Let's go past October. Okay, we're in July now. Okay, that's fine. All right, let's take a look here. Okay. Now, here's an exhaustion that bounced. So you're trading here. You're selling. Okay. You've sold here, and your next pivot line is the same day's pivot line is right here. That's your guaranteed profit zone. But you keep going. You have your analysis or my forecast or whatever you're using that says it's going to be a sell. You know, it's going to be a sell movement. So you hold on. You trust that. You hold on. And you see the market's gone past our guaranteed zone. And it's come down. It's come back up. And what do you know? It's created another exhaustion. And it's bounced off of that level. If you draw a line on the tip or its body, you can get an idea if this level is quite strong, and you can see that this exhaustion also bounced off of this area here. This is where you add additional position, write it, you can write it till the next pivot line, and you have how many pips here? 44 pips with one position. You have additional 50 pips with one position and additional 40 pips, additional 50 pips with another position. That's 150 pips total if you consider it as one position in one pair. You put correlation together, there's a very big chance you're going to hit 500, 600 pips doing this in a matter of hours. Okay? So, now, the people that are in this room right now with me that are listening, I need you guys to understand one thing, and I'm going to share my experience with you that the people in this market who actually make the money are people with patience. Just have patience. I can hold your hand and show you how to make the money. Just have patience, and it will create a profit for you if you just wait for these setups. Okay? If you just wait, and wait, you'll see a setup show up. You enter as a correlating pair. You take 300, 400 pips off of a single day. You walk away. Maybe you might not get a trade the next day, but the other day, the day after that, maybe you will. Okay? You will get at least 5 to 10 trades in a month for sure. And it all depends on how much the market is swinging or moving. And you can really add up some profit like that. Again, patience is the key. Okay? I myself don't have patience sometimes, but I can tell you by my experience that patients are the people with the money. Okay. Now let's okay, so John, did that example make sense to you? Would you like another one? Okay, here's another one right here actually, just in case. If you sold anywhere up here, if you sold anywhere up here, market went down, came back up, it bounced off. You can create a line right there, and you can see this level was strong in the past. Bounced off, add additional position. You can write it to the next pivot line. Over here would be your next pivot line to be safe. Okay, so this is how you add lots of reward to your same risk that you will initially have. Okay. All right. Now, we got 15 more minutes left to this webinar session, 15, probably 20. I'm going to share one more technique with you guys. It's called the trend continuation pattern. Now, any guesses what is a trend continuation pattern? Nice, perfect trade right here. Textbook example. Very beautiful, very nice. Yeah, so any guesses um, what are, I'm sorry, I'm losing my train of thought. Trend continuation patterns are? Okay. Did the GBP USD just bounce off of pivot with a huge downward movement right now as we speak? Okay, doubling up on positions was the last thing we talked about. Bill Milner says, you were showing us an example of the strategy as per John's request. Last example of the strategy. Oh wow, it was that far back? Okay, did we reach anything in terms of but extra profit with trailing stop slowly? Okay, okay, so yes, you should use market harmony when trading the forex markets because if the market moves quickly, you want to move your stops quickly behind it. If it moves slowly, you want to do the same. So it's advisable that you do not use a trailing stop loss that's given to you by your broker. Okay, because the trailing stop loss that's given to you by brokers is you cannot add in logic. You can only add in a set number. Okay, so you cannot mimic the market's movement speed. Okay, what is the stop loss for new added positions? It can be you can keep it as a hard stop, 20, 30, 40 pips, or you can keep it at what I like to do it is the pivot below the tip of the exhaustion. Let me show you here. For example, you can see the red arrow here for this exhaustion. The tip is right here, so let's draw a line on the tip. Boom. What is the pivot right below that? In the last 3 days is this one right here. So you can keep your stop right there, or a few pips below that. That would be your stop. Okay. This particular trade goes up. Guaranteed profit zone is right here, and then it goes further up where you can continue to trail your stop as it reaches its next pivot line, this one or this one. Okay, so let's we can calculate if you want to take it from the tip all the way to the top pivot line. You can see that's 130 pips. That might be too far, but can we make it to the second last one? 102 pips. Yes, we can. So you have to keep that in mind too, that am I pushing it when I'm expecting a home run? Okay. Okay. Now, I wanted to discuss with you guys, even though we've gone way past our time, I want to discuss trend continuation patterns. Okay. Any guesses on what a trend continuation pattern is? Okay. Yes, no, nothing? Nobody? No guesses? Is my internet still running? Yes, it's running. Okay, great. Let's see. Same color candles, Gary. Okay. Ram says, can you have weekly follow-up webinar on the weekend? I don't know if I can do it on the weekend. I mean, I'm already doing this outside my work hours, but doing this on the weekend will cut into my private time as well. So I can try, but let's see. Let's see. Once we schedule everything up, we'll see how it goes. Okay. Gareth, adding positions on the next buy. Okay. Okay. Trend continuation patterns. Let me show you this. Okay. Let's give you a nice example here. Actually, this was a nice example right there. When you have an exhaustion that's upside down within a trend like that, that also can be traded, because that is telling you the trend wants to continue downward. There's too much pressure from the top pushing it down, and it's bounced off of a pivot. If you put your arrow on the body, you can see it, the rocket wants to go down. Okay, how far do you take it down? You already know where to exit because you have your pivot lines right there. Would be your immediate guaranteed profit exit is right there. Okay, so a trend continuation pattern is just an exhaustion that is upside down. Okay, and there are a lot of them. There's one here. There's one right next to it that tells you that yes, it's going to continue. There's one after that too. See, all these are trend continuation patterns. It's telling you that yes, it's going to go, it's going to go, it's going to go. Okay. Here's a really nice one that's bounced off of a pivot. Trend continuation pattern for a downward move. Okay. Here's one that did not work. Here's a example of a one that did not work. Okay. Did not reach any of your pivot lines. It went all the way up immediately. Okay. So trend continuation patterns are good confirmations, but yeah, you got to be careful. Now, there are, in fact, I think I just saw one on the current market. Let's go to the current market. Let's take a look. Okay, the euro has gone crazy as far as what I see right now. Let's take a look at pound. Pound, same thing. I thought I saw a really nice pattern. Okay, trend continuation patterns occurring on Canadian dollar, all the way down. Okay, move to Swiss franc. Swiss franc, here's a failed trend continuation pattern. It's not bouncing off a pivot. In fact, it's near a pivot, so it's a little bit risky. Okay, let's go to Australian dollar. No trend continuation patterns. In fact, maybe an exhaustion. Not very clear, but it looks like it might be one. New Zealand dollar. Let's take a look. Maybe that was an exhaustion because Australian dollar showing an exhaustion, New Zealand dollar showing an exhaustion. Take a look at euro yen. Euro yen trend continuation patterns here as well, but no exhaustions. Okay. So now, just okay. Let's go to the questions, and I'll give you an analysis on what's going on right now. Okay. Previous resistance becomes support, and the opposite. Okay. Yeah, John, I'll go over that again. To find the retrace and bounce, should we go Lower time frame on the charts? No, never go lower on the time frame. Okay. I personally do not like that at all because all that does is makes you a perfectionist, which is not a good thing when it comes to trading. You do not want to run after the additional 1 or 2 pips that you might have missed. Forget the 1 or 2 pips, forget the 10, 20 pips that you might have missed. Go for the big shot that you know you can get regardless. And sacrifice the 5 or 10 pips for comfort. Having comfort while investing is the #1 key because that will keep you going. If you're always stressed out while investing, yeah, you'll make the money, but is it any different than doing a job? Might as well go to work and have your boss do that for you. So, all right. So, in Australian dollar, US dollar, there's an exhaustion. Let's take a look. Australian dollar, US dollar. Yes, this is the exhaustion that we're referring to, Mr. Simon, because you can see in Australian dollar there's an exhaustion look-alike, not very clear, but that could be confirmed with New Zealand dollar, US dollar. You can see that it's over there. It's a little bit more clear. Now, none of these are bouncing off of the pivot. What does that mean? Let's take a look at Euro Yen. You can see the market wants to go down because we have trend continuation patterns on Euro USD, Euro Yen, telling us that the market wants to push down. We're getting way too many tails on the top side. Okay. Now, John, your question was previous resistance becomes support. Okay, let's go over to that because that is very important. Let's go to that really quick. Okay, let me show you a nice example. This happens in a nice moving market. Okay, let's say you've okay, let's use this example. You see this big exhaustion right here. Let's say you've just drank Red Bull and you're like in the mood to trade. Okay, and you've taken this trade somehow. You've sold on the next candle right around here. Trade goes down, comes up. Does it touch anything over here? No. Goes down, goes into the next day, comes up over here. Let's put our line onto the body and the tail. Okay, Now we have a little bounce here that we had earlier. Now your support over here, your support over here has become resistance now. Means first position, stop equals 0, and you add a second position with the same amount of pips of stop loss that you used for the first position initially. Okay, and as you're trading, you feel a little bit comfort. You have because you see these exhaustion candles. Trend continuation candles, telling you that okay, whatever you're doing is good. Good job. And if you're looking at going to the next pivot line, which would be over here, or even the next one was hit too. Both of them were hit. So if you add them all together, you can easily, with these exhaustion candles, guaranteed pivot zones, adding extra positions, using correlations on a single day in a matter of hours, you can hit 1,000 pips. I've done it many times. I've shared statements. I've showed it online. I'm on YouTube about it. So it can be done. It's not difficult. It's just that you need to stay cautious. You need to take your time. You need to do your analysis, and you do not need to jump the gun. That's why you stay on the 1 hour chart. Take your time, relax. Take a trade, place in your orders, walk away. As you become an expert in placing your orders and walking away, that's when you have, okay, I'm going to give it additional 2 or 3 hours and see, can I do better than what I did last month in terms of doing this technique? Can I add 10, 20% extra to my account from what I did last month by doing these extra little techniques? So again, today's webinar consisted of every information of increasing your profits, okay? Maximizing profits. Okay, so as of right now, any questions so far? Any questions throughout today's tips and tricks, yesterday's strategy that was taught to you, that we had a recap of today? Any questions whatsoever? I can go over it really quickly. Okay, we got a question here. Let's take a look here. Perry said, I took the Australian dollar US dollar short. Was the candle prior to the drop and exhaustion candle? I thought so. Let's take a look. Yes. The reason why I say yes, because you can look at it on New Zealand dollar and see, yes, that was an exhaustion candle. It's a little bit more clear on New Zealand dollar. New Zealand dollar, US dollar. Yeah? So that gives you confirmation. Now, if you put these all together, you have one exhaustion that's bouncing off of a pivot, which is on Australian dollar, US dollar. If you put them all together, you have yourself a full-blown trade going on right now with a correlation. Okay? Now, next question, Gary. Uh, where do I get the pivot indicator from? It is available on urbanforex.com. There should be a search bar somewhere. Just type in pivots. You'll find it. I think some of my strategies that I use that I share on urbanforex.com use pivot points. You can use any one of those indicators. It's all the same one. Okay. Um, okay. Okay, Mr. Simon, you say so far so good. Need to attend the session, first session. Yes, I will email you guys once all these sessions are up on a video on YouTube, and you guys can take a look. Please do rate them if you guys like it. Please do like them. John says, can you please show us the very first add one more lot strategy that we saw today to take a snapshot? Sure, sure. Let me show you that one more time. Um, let's give you an example of pound. Okay, I showed you Euro Yen last time and Euro USD. Let's look at Pound US dollar. Okay, let's say you've traded anywhere here. In fact, let's not, let's say, let's take a look at a proper sell that you would have taken. Um, Let me find an exhaustion. Okay, there we go. Trend continuation pattern. Okay. Okay, let's say you took that trend continuation pattern, not the exhaustion. Okay. And you sold here, market's gone down, it's come back up, and over here you have one of two things. It's not crossing above the pivot line, and you also see that in the past that area was support many times, and then now it's become resistance. Okay, as it starts going down over here, or over here, you can add in another position. And you can add your stops up here, where your whatever stops you kept for this initially can go over here, and your first position goes to zero, your stop loss, and you can ride it till the next pivot line or the one after that if you're very careful, but the next pivot line would be the safest bet. Okay, hopefully that was good for you. Don't worry about screenshots. Everything that I teach, I'm going to have tons and tons of examples on our forums. The forums are not up yet. They will be installed and running in the next 48 or 72 hours. And this, we are contemplating of making this forum private or not. Nothing will be charged, don't worry, but we might do it for people only, people who are interested. We have a lot of spammers out there who come in and just advertise our stuff. Okay. Gareth, could you re-explain the exhaustion candle compared to the trend line candle? Okay, yes. Gareth, let's go over the exhaustion candles. There's two types of candles. We have the exhaustion candles and the trend continuation pattern candles. Exhaustion candles happens at a tip of a trend. Let me show you a very nice example. Okay, this is an exhaustion candle. This happened at a tip of a trend. The tail is on top. The body is on bottom. So that means the weight is to go down. Okay, let me show you another exhaustion candle. Here. Okay, you can see the immediate trend was coming down, and then we had this exhaustion. Nice long tail, small body towards the top for upwards. Same thing over here. I wouldn't really say, but the immediate trend, if you really look at it, it's like a downward movement because we have lower highs, lower highs, lower highs. So also an exhaustion. Now, because the tail is on the bottom, head is on the top, and it's telling you that it wants to go north. Now, trend continuation pattern is inside a trend. It's not in the corner, it's not at the tip of a trend. Let me show you an example for that. Let me show you a nice clean example. So it's very clear. Okay. Okay, you see, let's delete. Okay, you see this trend is going upwards, right? As it's going upwards, this right here, you can see it's an exhaustion, but it's upside down. It's going with the trend because the body's on top and the tail's on bottom. This is a trend continuation pattern. Excuse me. Let me show you one more example of a trend continuation pattern so I don't confuse you. Market is heading downwards. Immediate trend is also downwards. And we have a upside down exhaustion here that says it wants to continue down. Tail's on top, head is on bottom. That means the weight is towards the bottom. Okay, make sense? Okay. Okay, great. All right, Alvin, just want to thank you so much for taking the personal time. Yeah, you're very welcome, Alvin. We will have regular webinars. I will be sharing a lot of stuff that I have. I'm actually looking towards, you know, stop trading myself and start creating a community and all that stuff. I've been trading for way too long now. So, okay, you're very welcome, Simon. Danny, do you still have the 10 pip per day strategy? Yes, we do have that. I do not currently use it, but we do have it. I have an intern who's actually trading the 10 pips. I think he's trading the urban towers, so that's there. We will create webinars for that as well, the 10 pips per day. I think a lot of people are very interested in that. Bill, do you have the 1 hour charts because the strategy works better on the time frame and or because of the chart? I trade the 1 hour because it filters the market, the news, the fundamental news, and also that because 1 hour is a decent amount of time for you to take a break and come back for whatever you have to do, or if you're at work and you just once an hour to check back on your charts is not that bad. And also, the movement on a 1 hour chart, your stops will be 30 to 40 pips compared to a 4 hour chart where you have to keep your stops at maybe 50 to 100 pips. Okay. All right. Another 3 day pivot rule still apply. Smaller time frames, no. 3 day pivot rule may not apply. 1 hour charts, yes, because there's only 24 candles worth of data on the 1 hour charts for per day. On a smaller time frame, you might have to go session by session to create pivots. Okay, Samuel, Naveen, one of your staff members posts daily blogs on Facebook trades. Yes, he posts about urban tower scalping strategy. He has a blog about that. He's an intern at our company, and he shares his insights on that. Is it possible to have someone do that for this one? Yes, we will do this for this strategy as well. And in fact, I myself am going to be taking care of that until one of you guys become an expert and you guys can help me handle that blog or webinars. I would love for you guys to help me out. And no, it is not asking too much. You guys deserve this. It's fine. I think education. Everybody deserves education. Okay, Gary, do you always use pivot points or do I use fibs also? I always use pivot points for this strategy. Fibonacci's I use for my forecasting that you see on forexwatchers.com. Over there, that's where I use my. In fact, if any of you guys want to pick up the forecast at forexwatchers.com, the promotion is going to end on the end of the month. We have, like 75% off on all the prices, and we're going to hike the rates back up in January. It's just a Christmas deal that we've had. Samuel, thanks so much for this webinar. You're very welcome. Mr. Simon, just to reconfirm in Australian dollar, hitting the resistance now. Okay, let's take a look. Australian dollar, US dollar, real quick. Australian dollar, US dollar. Yes, it's hitting. Now, one main thing, Mr. Simon, you're telling me to take a look at this. Why? Okay. We have 10 more minutes to go till the candle ends. So the market is still moving. Can't say anything. What's going to happen? Here's how you analyze a situation like this. Let me close this real quick. Now, look at the tail on top. Look how big the tail on top is, and focus on how big the tail on the bottom is going to be at the close of the candle. That will give you an indication on what's going to happen. Now, once it crosses below this pivot line, you might have a fair idea of what it's going to do, because this pivot line is technically really powerful, because you can see we have 3 days worth of data on or around this pivot line right there. Okay, we have today's pivot line, yesterday's pivot line, day before yesterday's pivot line, all around this area. So this is a little strong area, and you can see we've had resistance, support, I'm sorry, support here too, earlier today. It hasn't crossed that. So if it does cross it, expect a further fall. That's how you do the analysis, okay? I hope that makes sense. But wait for the candle to close, wait for maybe a trend continuation pattern, but that's how you understand. If you have a long tail, maybe the market's turning around. Okay. I'd love to help out once I become a... Yes, Samuel. We are very open to a lot of the people. We're always looking for interns to help us out. And whatever I have to share, I share first with my interns, then with the public. So that's one benefit. I hope to have a seminar from you. How do you do the forecasting? Because you are perfect on that. My forecasting is still, I am still not going to share that information, because yeah, that's that's where the money comes from to run urbanforex.com. To be very fair enough, if I release that information on how I'm coming up with these forecasts at like pinpoint accuracy, Urban Forex will die. And we need Urban Forex to live, because when I first started out trading Forex, nobody was there to help me. And I don't want this to be the case for a lot of you guys out there. Okay. The fundamentals, Mr. Simon, just to understand my study. Okay, Bill, uh, will we be grandfathered moving forward? Bill, yes. Any questions that you guys, if you guys take a 3-month subscription, you guys have access to the support forum, which I personally answer to. So yeah, if you guys need any help, I'm always going to be there. And in fact, I might even start launching webinars on forexwatchers.com too. Okay, thank you. You're welcome. Perry, Naveen, why do you do this so generously? Um, I don't know. I guess I've had this since a kid. I've always had that soft spot for somebody who's not getting it right. If I was in school, if I see somebody who's not understanding the material, I always help them out. If I was, in high school, I saw somebody getting bullied, I'd always help them out. I've always had that soft spot for people. I don't know. Maybe it's just me, or I don't know what it is, but I'm in Forex now, and I'd love to help as much as I can. Okay, you're very welcome. I hope you. Um, is the Forex Watchers? It's forexwatchers.com. It's forexwatchers.com. There we go. Okay. Can we have your email ID? I do not want to give my email ID out now. Actually, I can. No, I cannot. I have this webinar it's being recorded. If I give my email ID out, there's going to be a lot of people with my email address. Message me in private, and I'll get it to you. Also, I was one of your first members at Forex Watchers. Um, okay, yes, I do remember you, Perry. I've seen your name many times at Urban Forex and at Forex Watchers. I think the rates are extremely low right now, but do email us. Get in touch with Samira. Email her at Samira at forexwatchers.com or info@forexwatchers.com. Tell her you're an ex-member, and she'll look up your records and she'll offer you a further discount. We do take care of our older members that are coming back. Okay, Mr. Simon, the email that you got for the webinar, just reply to that email, and I will get it personally, because that comes to me. Okay, Samuel, sorry, Naveen, you mentioned some subscription service. Where can we find this? You can find it at forexwatchers.com. It's www.forexwatchers.com. Okay. So I'm sorry I have to cut it short right now. We've gone way over in time, and my recording is going to become really long. So I thank you all for attending. I hope you guys learned a lot, and I do hope to see you guys again soon. You guys have been a great crowd. Thanks a lot. Take care. Good night.